Let me put that question to you. Why would we cut rates if there is some sort of tail risk, some sort of concern around a resurgence of commodity-driven inflation as we kind of stare down the barrel of potentially $100 oil? Your thoughts on why we would cut rates?
Well, it depends on the economic outlook. In a baseline, growth is below potential. Finally, inflation gradually falls, and the Fed goes ahead and starts cutting rate in June 3 times this year. But as you pointed out, there are tail risks, and those tail risks are driven by geopolitical tensions, both what happens right now in the Middle East that could lead to higher energy and food prices. There could be even an escalation of the conflict between Russia and Ukraine with a Russian offensive that might also shock, like it did in 2022, a variety of commodity prices. If those shocks will occur, then inflation will be higher, headline, but then it can pass through to core, and then growth could slow down, and then there'll be a difficult dilemma for central banks that would have to delay rate cuts or even raise rates if inflation is really much higher while economic growth is slowing down, because this will be stagflationary kind of shocks. So it depends on whether the evolution of some of the geopolitical shocks and other ones is going to lead to higher commodity prices.
But Nouriel, the Fed isn't even talking about that. They're talking about wages. They're talking about labor. Is the Fed, from Jay Powell to all the speakers on the board, are they missing the boat on those geopolitical risks?
Well, they usually don't want to speak about them in, let's say, fine detail. And fair enough, the baseline even on the geopolitical factors will be that the conflict between Israel and Hamas is going to be limited to Gaza, not to expand to Hezbollah in Lebanon or Iran, that the tensions in the various straits remain limited, that Russia-Ukraine, however ugly this war is not going to have a further impact on commodity prices. And there is a relative thaw between the US and China this year that may continue or not. So in a baseline, of course, commodity prices could be slightly higher. The pass-through to headline inflation takes time. There may not be second-round effects on wage inflation and to core inflation, and they can go ahead and plan as they are to start cutting rates sometime in the middle of this year. But if those tail risks were to really materialize, they'll have to think otherwise and explain why they're delaying rate cuts.
Nouriel, good morning, it's Guy. Do you think markets are underestimating the geopolitical risk that potentially we face?
But for a while, the markets were actually pricing in rate cuts that were sooner and faster than what, say, the Fed was saying. I think that actually the situation is almost kind of reversed right now, where people in the market are starting to think about whether inflation could be higher, either because we are in a no-landing zone for the US, where growth could be higher than expected and inflation doesn't fall as much, or in a situation in which some of the geopolitical risks that now are being priced in, say, energy prices are going to have an impact on inflation. So markets, of course, react faster than policymakers, and policymakers are cautious to make statements until some of these risks materialize in a more serious way. But yeah, there's been a bit of a reversal in terms of dovishness and hawkishness of markets relative to policymakers.
Nouriel, to your mind, what explains the outperformance we're seeing of the US economy right now? Is it fiscal policy? Is it immigration? That seems to be a debate that is increasingly growing, particularly ahead of payrolls today. What explains that outperformance, and is that outperformance sustainable?
Well, those factors matter. Certainly, there are three impulses that come from the IRA, the Infrastructure Act, and the CHIPS Act that have led to a burst of investment of private sector, capex spending, in the U.S. economy. You can call it fiscal or quasi-fiscal. The tightness in the labor market has been moderated by a surge in immigration in spite of the restriction and otherwise. And there was a reversal of all the negative aggregate supply shocks of COVID that explain also why U.S. has been growing last year more than potential and inflation fell. Inflation fell not as much because of monetary policy, but because those three negative aggregate supply shocks coming the impact of COVID on production, supply of labor, impact of the zero COVID policy of China on global supply chains, and impact of the Russian invasion of Ukraine on commodity prices. Those three shocks reversed significantly around the world, but especially for the U.S. So we got lucky that we were able to maintain a stronger growth with falling inflation because we had positive aggregate supply shocks as well.
Okay, so we had the fiscal and the quasi-fiscal, and then we also got lucky. Can I ask you, Nouriel, your views on China right now? We see Janet Yellen, Treasury Secretary, in China right now, saying that Chinese capacity is more than the world economy can bear. Do you share her concerns about capacity, a supply coming out of China?
I do. I just spent a week in China myself, and it's clear that since their old growth model based on one side, infrastructure and real estate now is faltering, they want to go back again to export-led growth with new investment into what they call the new high-tech sector of the future. That is fine, but domestic demand, especially private consumption, is weak. And if they increase supply and then the domestic demand doesn't go higher, then they have a problem because they have to dump all this excess capacity and overcapacity in global market, whether it's EVs, solar panel, batteries, but even traditional goods like steel, automobiles, aluminum, and you name it. And that's going to create even more protectionist pressures, not only in the US and in Europe, but also even among the BRICS that are getting upset that Chinese are dumping cheap goods in their market, hurting their own manufacturing. So that strategy is not going to be acceptable to the world.